In this video, I want to talk about the taxation of property and a tax problem that people often don't realise until it's too late. This video is about how property is taxed. Like any business, you take your income, which in property is rental income, and then you take off all your expenses, and that gives you your profit. Now, the revenue have already decided that interest is only allowable at the basic rate of tax. So that may be allowable and may not be allowable depending on whether you're a higher rate taxpayer or you're a lower rate taxpayer. So that's interest. The other main expenses is the cost of refurbishing the property. But there is a rule that I think is important. Pre-letting expenses, that's expenses that go on before you let your property, are not tax allowable, not for income tax. So what do I mean by that? So if you buy your property and then spend a whole load of money doing it up, and then you rent it out, you're probably expecting not to pay tax because you spent a whole load of money doing up your property. But that might not be the case, because expenditure made before you let the property is called pre-letting expenses, and that is not allowable against income tax. So if you've received rent of £6,000 a year and you spent £10,000 before you let the property doing it up, then you're still going to pay tax on the £6,000 because that £10,000 isn't allowable for income tax. It's only allowed for capital gains tax when you sell the property. Now, you might not think that is fair, but it is fair, because what you've got to compare your property against, if you bought a brand new property that was all done up, then you should get the same tax treatment as buying a rundown property and then doing it up as if it is new. And that's what this tax treatment does. Pre-letting expenses means that your property is sort of taxed like it was if it was a new build. So all the costs that you initially spend before you've let it are only taxable for capital gains tax and not for income tax. So if you're canny and the property is in a good enough state, one way to get around this is to buy the property, let it out, then do it up, and then let it. And then most of the expenses may well be tax allowable. It depends on exactly what they are. Taxation is never simple, and the taxation of property is no exception to that. So if you want to go into it in more detail, then please get in touch and I'll help you as much as I can. Please like this video and subscribe if you want to see more content like this.